Good morning, dear students. Welcome to the home mentoring session of the accountancy. Myself, CSK Khanna from the SD Vidya School, Ambala, Kent. Dear students, in our previous class, we had learned the different methods regarding the adjustment in the capital account of the partners. Today, I will share with you numerical problem from the exercise that how actually the adjustment in the capital account is to be done. Let's do this question. It says that A and B are partners sharing profits in the proportion of 3:2. Their balance sheet is given to you. They agree to admit C as a new partner on the following terms. Important terms are given. C will be given 2/9 share and brings 50,000 for his share of capital and goodwill. Goodwill of the firm will be calculated at 2.5 year purchase of the average profit of the last 4 years, for which the figures are given to you. Then half the amount of goodwill is withdrawn by the old partners. 15% of the general reserve is to be remain as provision against doubtful debts. Outstanding salaries be increased to rupees 16,000. Stock is overvalued by 25% and building is undervalued by 25%. Trademarks be written off by 50%. New profit sharing ratio of partners will be 4:3:2, which is given, and capital accounts of A and B will be adjusted on the basis of C's capital by bringing in or withdrawing the cash as the case may be. So here we have to do this complete question as usually till to the capital accounts. The question will remain same. So first of all, we have to prepare the revaluation account, and then we have also to find out the amount of goodwill on the basis which is given here in the second step. Here in the first point it says that C will be given 2/9 share of profit and he will bring 50,000 for his share of capital and goodwill. Note it down that he is bringing total rupees 50,000, but it is not individually bifurcated or separated that how much is the amount of capital and how much is the amount of goodwill. He brings total 50,000, out of which we have to check that how much is the amount of capital and how much is the amount of goodwill. That will be found out by calculating the amount of goodwill of the firm. Then half the amount of goodwill is withdrawn, that is through the bank, you already know. 15% of the general reserve will be kept as a provision for doubtful debts. Here general reserve is given 10,000. So 15% more provision is to be kept out. Then see here, revaluation account say to outstanding salaries, as the outstanding salaries being increased to 16,000. Here it is given of 4,000. So extra provision is required of 12,000. Then stock had a loss of 8,000. Stock is overvalued by 25%. Stock value is given 40,000. It is overvalued by 25%. Please understand that it is not 10,000 because after overvaluation of 25% it is 40,000. So automatically it is 20% overvalued of rupees 40,000. So we will find it out 8,000 as a loss to the revaluation account in the debit side. Then trademarks are the valueless. There is trademarks be written off by 50%. Trademarks are of 8,000 in the balance sheet. 50% is the loss that we had written in the debit side. Building is appreciated. See here, the value of building is undervalued by 25%. Same way here, building value is given 25% and it is undervalued by 25%. So we will find it out. It is 25,000 because 75,000 and 25% is undervalued. It means that it is actually 33.33% undervalued. So if you find out the total valuation comes to 1 lakh and it is given 75,000. So it is undervalued by 25%. So this way we had prepared the revaluation account and the result is a profit of 1,000, which is shared among old partners in their old profit sharing ratio, which is 3:2 is given. Then come to the partners capital account. By balance PD opening balances are given. By general reserve it is 8,500. How this 8,500 is there? General reserve balance is given 10,000. Now clearly it say that 15% of is to be remain as provision against doubtful debts. So automatically net free reserve will be of 8,500. That 8,500 will be divided among the partners in their old profit sharing ratio, which is 3:2. Revaluation profit is credited here as we had calculated above, and the amount of goodwill which is being calculated, that is credited to the old partners in their sacrificing ratio. Now how this amount of goodwill is finding out, please check it here. That very simply, the total profit of the firms 2 lakh, they are given. Average profit is 50,000 dividing by 4. Super profit we had find it out by deducting the normal profit 36,000. Then goodwill is to be calculated 2.5 year multiplication of the super profit, which is amounts to 90,000. Out of 90,000, the new partner share is 2/9 as it is given in the statement that C will be given 2/9 share of profit. So we will find out 2/9 share of this amount of rupees 90,000, which amounts to rupees 20,000. So he will have the goodwill of 20,000 and capital of 30,000 out of this. He is bringing total 50,000. Out of this 50,000, 20,000 is the amount of the goodwill which we had calculated, and 30,000 is the amount of capital brought in by him. So this amount of goodwill is to be brought in by him, which is to be credited them 14,000, 16,000 in the sacrificing ratio, which is calculated 7:3, and that 20,000 to be debited here. Here it is mentioned only 30,000. If you write here total 50,000 brought in by C, so 20,000 will be debited here of 14 and 6,000. Automatically it left out 30,000 as amount of capital. Then we will find out the balances, and after we will find out the balance, we had calculated that A is having a balance of 62,700. Very simply, B is having a balance of, very clearly what we had calculated, that is 36,800. C, there is no question, no problem, 30,000. Now we will have to find out an adjustment in the capital accounts on the basis of C's capital by bringing in or withdrawing the cash as the case may be. So accordingly we will find out the total capital of the new firm. Now we had calculated 30,000 is capital for 2/9 share. On this basis we will find out the total capital of the firm, that amounts to 1,35,000. How? 30,000 into 9/2. Reciprocal of this, that capital will be divided into new ratio. New ratio is already given 4:3:2. We would find the capital 60,000, 45,000 and 30,000. We will compare these amounts with the capital balances after all adjustments. For A it is 62,700. He needs 60,000, so he will withdraw 2,700. As per the new capital, B to be required 45,000. He is having a balance of 36,800, and then he has to introduce 8,200 in order to make a 45,000. In the old capital accounts, he is having, after all adjustment, balance of 36,800. As per the new capital, he needs 45,000, so he will bring in 8,200 more. That will make his capital 45,000. For C, there is no problem. He has already having a capital of 30,000, which he brought in cash. Then the balance sheet will be prepared, and this balance sheet will be prepared with the revised value of the assets and liabilities. Now here cash at bank is given 5,000. He brought 50,000 more, so automatically it amounts to 55,000, but it is also been withdrawn by the partner here. See the amount of the goodwill, 14,000, 6,000, 7,300. That will also be deducted from this, and net amount will be shown here. Opening balance 5,000, addition 50,000, withdrawn of the goodwill, that is 10,000 in cash. The remaining balance will be shown here. Here it is some way to be adjusted. How? 2700 to be withdrawn and 8200 will be added in the bank account. You have to prepare the separate bank account with the opening balance, very simple, of 5000. Very simple addition made by C, 50,000. Then capital brought in by B, 8200. Then withdrawn by A, 2700 in the credit side. 7,000 of goodwill withdrawn by A. 3,000 of the goodwill withdrawn by B. And balance you amount 50,500. Debtors 30,000 here. 1,000 being deducted as provision, but 1,500 of the reserve, as per the adjustment noted down, 15% of the general reserve is to be remain as provision against doubtful debts. So that 1,500 will also be deducted. So net and total deduction will be of 2,500. Stock revalued at 32,000, 40,000 minus 8,000. Trademarks 8,000 minus 4,000, 4,000 is the value. Building mean appreciated to 1 lakh. Creditors remains at rupees 63,000. Outstanding salaries being increased again. So we will write the new amount of 16,000 and capitals as per the new ratio. So this way we will have calculated the amount of the adjustment through the capitals, and the balance sheet will agree with a total of 2,14,000. I would continue in our next class relating to the other very important example from your book relating to the adjustment in the capital accounts. Thank you very much. Have a wonderful day and practice all the important questions from your exercise which come in any year in any of the board of your class 12th. Thank you very much once again.